The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday, March 14th. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. That's the number to use. Give me a call. Let's talk about this market. You can catch my show every day on TFNN from 3 to 4 Eastern. It's also available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi. That's all you got to do. You'll be able to listen to the stream that way. And daily reminder, don't forget about Tiger TV on the homepage of TFNN.com, Channel 1. The show is carried live. It is archived in Channel 13 with Tiger TV. Not only do you get the show audio, but you can also look at charts live right along with me. If you want to look at Tiger TV on your handheld device, that is easy to do as well. Just open your smartphone browser again, type in TFNN.com. Over on the right-hand side of the page, you'll see a box with 3 cell phones in it. Just click that box. It will start streaming on your phone soon after. All right, Dow Jones Industrial Average outperforming today, trying to make it 10 winning sessions in a row. Very impressive performance for the Dow over the past couple of weeks. Right now, it is right at its session high, up, 67 points, 0.5% to 14,522. So good day for the Dow taking shape here. We've also got the S&P 500 having a good day as well. Major averages pushing into session highs into the last hour of trading here. S&P up close to 7 points, 0.4% to 1561. If you're looking on CNBC says the S&P is only about 6 points away from its 2007 high. You got to look at the intraday high, and the intraday high for the S&P 500 back in October 2007 was 1576. So to me, it's still about 16 points to go before it clears that October 2007 high. But S&P doing nicely today, and tech stocks doing pretty well. NASDAQ Composite up 0.3%, about 10.5 points to 3256 last on the NASDAQ Composite. Volume on the NASDAQ tracking between 5 to 10% higher than what we saw Wednesday. Volume not heavy at all on Wednesday, in fact pretty light at 1.54 billion shares. So it's not going to take a lot of volume to come in higher than Wednesday's light level. Volume on the New York Stock Exchange also light Wednesday at 582 million shares. So both exchanges volume tracking 5 to 10% higher than the levels seen on Wednesday. Let's take a look at some story stocks here. Big day for Commvault Systems. This is a cloud play, provider of data and information management software. Monster move for Commvault, breaks out with conviction over 79. It got extended very quickly here. This is it's a tough deal buying these stocks that move so fast so quickly. It's up 8% right now, $6.23 gain to 83.80. So right now it's right at that 5% threshold. When a stock breaks out of a consolidation, which Commvault is doing today, you typically don't want to chase it when it moves 4 or 5% past the buy point. So at one point today it was about 7-8% past that 70 resistance level of 79. So very, very strong move today, though. Commvault volume very heavy. It has already traded about 2.8 million shares. Its average daily volume is about 700,000 shares. So volume looks to be more than 3 times its daily average. So nice day for Commvault. Spirit Airlines, another stock that has really made a monster move since a breakout over 20. And it continues higher. You look at a daily chart here, you see a excellent performance since the breakout over 20 in February. It's up another 3.4% today to $24.90. Spirit Airlines is a low-fare airline. And let's just take a look at the weekly chart here. We checked on this one yesterday. What's interesting about Spirit is that, oh gosh, where is it? I just have so many. There it is. Spirit Airlines. All right. See, the weekly chart here is trying to break out of a big long base that started back in 2012. So as far as the airlines go, this is definitely an intriguing play here. Still could be in the early stages of a multi-year move here, but Spirit Airlines looking pretty strong here. Extended after a breakout over 20, but still could see a little downward forming handle here, a little shakeout, and possibly get another entry point. So this one is on our watch list, and we'll continue to see if we get a low volume pullback. That could pave the way for even more strength down the line for Spirit Airlines. Shares of eBay bouncing back. This one's been under a lot of pressure lately. eBay, well, it was bouncing back, but not looking so hot anymore. It hit a high of 52.90 today. But it is now trading about a buck below that at 51.81, up 1.6%. It did gap up today, but trading near its session low after early strength. Earlier this week, Channel Advisor said that eBay's same-store sales for February were up just 8.2% from a year ago. That's a pretty big slowdown from the 18.8% growth that was seen in January. So a little bit of investor anxiety from that data. Coming up at the bottom of the hour, folks, just after 3:30 Eastern Time, going to be joined by my friend and colleague, Keir McDonough. We try to get him on about once a month. He's the principal and portfolio manager of Brigos Capital Management in Beantown. Website is brigoscapital.com. He is another growth investor. I've worked in the past with Keir, so we'll get his thoughts on the market just after 3:30 Eastern. He's got some names on his watch list that he's keeping track of as well. So we'll look forward to talking to Keir at the bottom of the hour. Checking in on shares of Apple. See what Apple is up to today. The stock did get an upgrade today from a little boutique called BTIG, upgraded to buy from neutral. The stock not really doing much, up 1% to 432.77. 432.77. Let's take a look at a weekly chart for Apple. And what is compelling here, I mean, what the bulls are going to say here is that Apple has basically come down to its last breakout area here in late 2011, early 2012, and so a floor might be being put in here, but significant resistance at that 458 level. Upgrade today from BTIG has helped shares a little bit, but not much. Of course, later today, Samsung is going to release the Galaxy S4, their new update to a very popular phone out there. According to research from Gartner, Apple's iPhone represented about 19% of global smartphone sales in 2012, compared with 66.4% for all Android phones. The Galaxy S4 is an Android phone based on Google's operating system. So that is a look at Apple paying a visit to its last breakout area, again, late 2011, 2012. So bottom maybe putting in here, but it's still too early to tell. LinkedIn having another nice day off its highs. Check in on shares of LinkedIn. It's actually trading near its session low, only up 84 cents now. It hit a high of 184.15, now trading at 180.11. Goldman raised its price target on LinkedIn today to $220 a share. Also want to take a look at Netflix. It is underperforming today, but this is it's actually a stock that we're going to talk about with Keir when he comes up at the bottom of the hour. Netflix in a fairly bullish technical formation here. It is underperforming today, down 2% to 188.43, but we'll talk with Keir about why it might not be too late with Netflix. Of course, yesterday Netflix unveiled a new feature that allows Netflix subscribers to let their Facebook friends know what TV shows and movies they're watching. They can also see friends viewing activity. And see what else we have here. Amazon gets a downgrade today, and a little break below the 50-day moving average here for Amazon. So all of a sudden starting to show suspicious technical action here. Volume pretty heavy in Amazon today. The downgrade came from JP Morgan. Basically said that e-commerce market share gains are likely to slow, but JP Morgan fairly optimistic about Amazon's cloud computing arm called Amazon Web Services. This is it's a big provider of basically infrastructure as a service. Other big players in that space would be Microsoft, Hewlett-Packard, IBM, and Rackspace. But Rackspace has really been hit hard in recent weeks due to concerns about slowing growth. So J.P. Morgan also lowered Amazon's price target to $300 from $333, and again, the stock is trading now below its 50-day moving average, which is normally a pretty good support level for a strong performing stock. Check in on shares of BlackBerry. News came out late Wednesday. A company said one of its partners placed an order for 1 million BlackBerry 10 smartphones, with shipments set to begin immediately. So BlackBerry, as you can see, recently moved above its 50-day moving average. It has reversed, though, after early strength. Hits a high of 1601, now trading at 1522, down 2.75% on the day. So BlackBerry's technical picture has definitely improved, but in the end, this is a base building stock, still not at a buy point here. But if the base continues to form and BlackBerry does make an effort to take out its recent high just over 18, then you may have a base completion and a possible breakout attempt. Did have some economic data today. We had weekly jobless claims. Another good reading here, down 10,000 to 332,000. Economists were expecting claims to come in at 350, so better than expected data there. February producer prices, latest reading on wholesale inflation, showed that overall prices up 0.7%, little bit above expectations of 0.6%. Core rate in line, 0.2% gain. Over the past 12 months, wholesale prices are up a muted 1.7%. Tomorrow, we'll have the latest reading on consumer prices from the Consumer Price Index. Overall prices should be up 0.5%. Core rate up 0.2%. The first reading on consumer sentiment for the month of March from the University of Michigan. And also the Empire Manufacturing Index. That's also out tomorrow. We also heard from foreclosure listing firm Realty Track. They came out with new data, showed the number of U.S. homes repossessed by lenders last month fell 11% from January and 29% from a year ago, the lowest level since September 2007. When we come back, we'll take a look and see how home builders are responding to that data, seeing some good movement in the home building space today. We'll do that when we come back. Thanks for tuning in, folks. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Home builders having a good day today. Checking in on the iShares Dow Jones U.S. Home Construction ETF. ITB is the symbol there, up 1.5% today to 2397. So good day for the ITB. Taking a look at some home builders on the move today. Ryland Group, volume pretty heavy in Ryland Group. Hey, it's having a really nice day. Looks like a little breakout here from a double bottom pattern. This double bottom pattern, you can see the start of the base right here. If you're watching in Tiger TV, you get one leg down and then a rally and then another leg down. You see obviously the low here got undercut. That serves to shake out sellers in the stock, and then boom, you break out. Looks like the swing point was right between 39 and 40, but a good heavy volume move for Ryland Group today, up 4.4% to 40.21. So I've been looking to get into the home builders here. Ryland Group looks actionable. Nice breakout there. And shares of Meritage Homes, MTH, also looking pretty solid here, up 2.7% to 44.51. So again, home builders moving partly due to that data from Realty Track that we talked about before we went into the last break that showed the number of U.S. homes repossessed by lenders fell 29% from a year ago, the lowest level since September 2007. Checking in on the U.S. dollar under a lot of pressure today. That's giving nice bid to stocks here. U.S. dollar index at 82.55, down about 0.4% on the day. That's a pretty big move for the dollar index lower. April gold up $2.30 today. 0.1% settles at $1,590.70 an ounce. April crude oil 93.03 a barrel, up 51 cents on the day. In the energy sector, we did have a few earnings reports here. Northern Tier Energy, NTI. This has been one of many oil refiners out there that has been moving higher for quite some time. It is under pressure today, down 4.6% to 30.24. Remember, yesterday Macquarie Research came out with a note. They downgraded three refiners. I believe Valero was one of them, Holly Frontier. But refiners have definitely been under pressure here. Earnings from Northern Tier, they missed expectations. $1.11 a share was down 71% from a year ago, well below expectations. Sales were better than expected, up 14% to $1.24 billion, but the stock is under pressure. Oil and gas producers acting very well here. Bonanza Creek Energy, we're going to hear from them after the close. Tough buy up here, looks extended to me. Stock up 2.1% to $39 a share. Another quarter of strong top-line growth is expected at Bonanza Creek Energy. They are based in Denver, Colorado, and this is a small-cap stock, but growth prospects are very, very bright here. So, definitely want to pay attention to stocks showing relative price strength with strong fundamentals. Bonanza Creek has both. It is a stock that has been under accumulation for quite some time, but it is also quite extended in price, as are a lot of other stocks out there. So you want to be careful not to chase. Don't chase. That's an easy way to lose money. So we'll see what Bonanza Creek has to say after the close today. And let's see, U.S. Silica Holdings. They priced 8.5 million shares at $22. So that is why the stock right now is trading at $21.97. I suspect, I'll go out on a limb and say that this stock is probably going to find support at its 50-day moving average. It's pretty close there now. 50-day line is at 20.55, but I think the fundamental story at U.S. Silica Holdings is strong enough where wouldn't be surprised to see SLCA firm up at its 50-day moving average, where it did just a little while ago. You can see right here. So we will see about that. Bond yields well off their highs for the day. They really haven't been moving much over the past 2 to 3 sessions, pretty much right where they closed at on Wednesday. 10-year note at 2.02%, 30-year bond 3.23%. In earnings news, let's check in on Men's Warehouse. MW, monster move for this stock today. Men's Warehouse, one of the heavily shorted stock out there. The short interest has actually come down a little bit. The short interest used to be much higher. Actually, not that high in the stock right now, but the stock up 19% to $34.60. News here, the clothing retailer said it has hired Jeffries & Company to explore strategic alternatives for its K&G business. This is a unit that sells discontinued name brand items. Only made up about 16% of the company's fourth quarter sales, but stock benefiting on the news. Coming up next, Keir McDonough from Brigos Capital. Stick with me, folks. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Quick check on the markets here. Indices holding near highs. Dow up about 66 points now. 14,521. NASDAQ Composite up a little more than 11 points to 3256. And the S&P 500 up just over 7 points to 1561. Joined right now by a friend, colleague, fellow growth stock enthusiast, Keir McDonough. He is principal and portfolio manager over at Breakout Capital Management in Boston, Massachusetts, my old stomping grounds. You can find more information about what Keir does at BreakoutCapital.com. BreakoutCapital.com. Keir, long time no speak. How you doing, buddy?
Kenny, I'm great. Nice to be with you again.
All right. So let's before we get into some talking about individual stocks here, let's talk about this market. I don't know about you, but I've heard more times than I can count on both hands that this is a hated rally. Do you hate this rally? Why are people saying this is one of the more hated rallies in recent memory?
The first thing that comes to mind when you say that, Ken, is maybe the ones who are underinvested are hating this market.
Well, I'd have to agree. What signs are we looking for here? I mean, how do you know when to put money to work? Why do you think it is that so many people are still underinvested here?
You know, a lot of fear has been created over the last decade since we had two big 50% corrections. I think people, every time the market seems to have gotten going over the last few years, and after an 8 or 10% move, we tend to pull back. And this one's, I think people have been conditioned for that to happen, and maybe that's what they're waiting to occur here.
So the million-dollar question, is it too late to get into the market? With the Dow up what looks like it's going to be 10 days in a row, S&P 500 still has not taken out its October 2007 high. Is it too late here, or is there time? What should investors be doing right now?
Well, again, you got to look at the backdrop of to answer the question directly, I think the market from here still offers opportunities. I think that's the important part, especially if you got longer than a 20-minute horizon. I think there's some good upside into the economy. I mean, just the numbers we've seen of late, the consumers acting more confidently, housing prices are up. We're also seeing 401k values up. And those are the two biggest assets that people have, their homes and their 401ks. If they feel wealthier, Americans are excellent at spending, and that's 2/3 of our economy. So I say the backdrop is pretty decent for that. Add into that, we have interest rates that are at historical lows, and you've got a Fed that's willing to keep the accelerator pressed hard to make sure this economy works. I would say don't fight the Fed.
Yeah, and in particular, the economic data, like you said, has been pretty good. Jobless claims, another good reading on jobless claims earlier today, and those the retail sales yesterday. A lot of people thinking this, the increased payroll tax that took effect, and what effect that was going to have on retail sales, and those retail sales numbers yesterday were pretty darn good.
That's right.
So you have. As always, you've brought in several growth names to talk about. You sent me over some interesting research and precedent. Wanted to start by talking about Netflix. Netflix has come up a lot off its bottom, and I'm going to put up a chart of Netflix in Tiger TV here. But why don't you talk a little bit about Netflix? Several stocks we can talk about today, but that there's historical precedent shows that despite a big move already, this run may not be over yet.
Sure. I'll get to that model in a second. I uncovered that a few weeks ago. But basically looking at Netflix, they've had the ability to reinvent themselves over time, from doing renting videos to now they're, streaming videos. But what's interesting here is they're really disrupting the traditional TV model because they're coming out with their own original content. Like they recently came out with this House of Cards, which has been very good for them. And they unload the entire. You can watch the entire thing at once, so it's not linear. You can watch it whenever you want to, and I think that's pretty disruptive. And they also signed a recent deal with Facebook that just came out yesterday, so you can kind of share movies and what are you watching, what do you think is good. So they're finding ways to climb into the social media as well, which I think will help make it a stickier service and help reduce some of their turnover.
It's pretty amazing to think that Netflix back in summer of 2011, it was on a massive uptrend, and it hit a high of around $300 a share, and then over the next 12 to 14 months, it went all the way down to $50, $55 a share. I mean, this stock was left for dead by a lot of people, and it's very rare when you see a company transform itself like this and really get its house in order like Netflix has.
No question there. And I think they're kind of going into a virtuous cycle where the better content that they have leads to more subscribers, and more subscribers leads to better content. They've got a 7 original content series scheduled to come out this year. And what that does is give them some more pricing power. And as I look at the earnings, they had a couple of tough years, but this year earnings should be up 372%. Next year, they should be up 118%, and they seem to be clicking on all cylinders right now.
Yeah, I mean the earnings power is just amazing. I mean 2012 was a real clunker of a year, and I think that's why the stock got hit so hard. But to see the estimates turn around the way they have, and it does look like a money-making machine going forward. So a stock that in October 2012 trading $55-$60 a share, it's up at $187, $188 here. Talk about its recent technical action, because it made earnings-inspired move during the week of January 25th. It was up some 70 points on the week, and it's been showing pretty bullish technical action. Why don't you explain, like on a weekly chart, what you're seeing on a daily chart? What does tight sideways trading, mean after after a big move like that?
Sure, it was a big move. You hit it right, Kenny. When it came out on earnings, the volume was up 350% the day it broke out. The day after was up over 500%, and that's a lot for a stock that trades, 4 million. Now it's trading almost 6 million shares a day of a stock that's, $180. That's a lot of money flowing into the stock. The thing that catches my eye, after this stock's basically doubled this year, and it's only corrected 11.2%. So that tells me that the institutions are willing to buy the stock on any pullbacks, and they're really not selling the position. So it's building what you would call a flag at this point. And if it can break through the flag, the precedent analysis that I have for this is Taser back in 2003, because it had a similar move, a big move. Its stock basically tripled. It gave up 80% of the gain and then came back, formed a flag just like this, and that stock went on to what I would call a monster move.
Well, several 100% at least Taser did when it was in a similar situation than that Netflix is right now.
If I remember correctly, Kenny, I think it was 3,000%.
Yeah. So it's just an incredible move. And if you have a chance, folks, I don't have the time to rejigger my chart here to show a monthly time frame and all that, but it is uncanny to see what a monthly chart looked like of Taser and the similarities that you see with Netflix here. So if this market uptrend stays intact and signs that more institutional money is coming in from the sidelines, it's entirely possible that Netflix could try to break out to the upside again. So this one should be front and center on your watch list. Its recent high right around 197, 198. So keep an eye on this one for another heavy volume breakout in coming days and weeks. All right, Kier, another interesting name here, Cree. Talk about Cree. This is ticker CREE.
Sure. Cree is the leader in efficiency lighting. Basically, they concentrate on LED, what are light-emitting diode. They're the world's leading manufacturer of these LEDs. Now, looking at the backdrop, the market right now is about $15 billion a year for this LED market. It should grow to about $100 billion over the next 10 years. Now, why is this important? These lights, these LED lights, are 25 times more efficient than the traditional incandescent bulbs, and they last much, much longer, up to 20 or 25,000 hours. Now, what's interesting here is the pricing point is just starting to come down on these. Cree just signed a deal with Home Depot that they're going to basically have new, low-cost, high-performance LED replacement bulbs. And I think we're at the tipping point right here for consumers.
You look at a weekly chart, it to me, the one thing I've been talking about on my show in recent days is that when you go through all the growth screens, you see plenty of stock showing relative price strength, and Cree is definitely in that boat. Plenty of stocks that are clearly under accumulation, but you also have a lot of stocks that are extended too far past proper buy points. Right now, I'd put Cree in that category, but that doesn't mean you stop paying attention to it. What kind of price action do you want to see from Cree here going forward that could present another buying opportunity?
You would look for some kind of tightness, some kind of consolidation. A period where the stock pauses for a period of weeks and take some of the speculation, take the eye off the stock for a while, and that might help it resume its uptrend if this trend continues.
Last time you were on, about a month ago, I know you mentioned shares of BlackRock, and I know you were talking about it, at a much lower price. It continues to be a great performer in the market. It's not a lone wolf in its industry group either. There are some other institutional quality names in the investment management space, but I assume you look at BlackRock as really the best of breed and the absolute leader in that group.
I would have to say yes. It's one of the leaders in the group. It's they manage about $3.8, $3.9 trillion. which is a lot of money. And one of their key growth areas right now are these ETFs, the iShare product that they have. I think we're seeing a secular shift right now between actively managed portfolios to these passive ETF portfolios, and I think that plays right into their hands. Management's done a great job. They've hiked the dividend 12%, gives it a good yield around 2.7, 2.8%. They've been buying back shares. And really, it's a bull market stock that if we continue to see the market run over time, these are stocks that could be early. You could be early in the game on these stocks. Now, one other thing, they just recently signed a deal with Fidelity. That was just announced last night. Fidelity, the big management firm, and they're going to deepen their relationship by offering, one of the things they're offering is twice as many of their ETFs on a no commission basis. I kind of think that's a big deal.
Yeah, and BlackRock, what's interesting is that, the initial base breakout, we're looking at a weekly chart of BlackRock in Tiger TV. I would probably say the breakout, this was, again, when the NASDAQ gapped up on January 2nd is when you had a lot of stocks making moves. A lot of stocks gapped up right along with the NASDAQ, and in fact, BlackRock made its move right around that time. It broke out during the week of January 4th, and it came down to its 10-week moving average just last week and found support. So, buying at the 10-week line, maybe you don't buy as much as you normally would, but that's a reasonable area to at least start a small position, correct?
Absolutely.
Yeah. All right. Before you go, I want to talk about for our Dow fans out there. Let's talk about a Dow component that has been acting very, very well. Let's talk about shares of Boeing, BA, on the New York Stock Exchange.
Boeing is in what I think is the early stages of a significant upcycle in production and delivery. Yeah, they had some issues recently. They're still having them with their batteries and fires and all that. But this is a very, very complex machine they've put together. And if this is the only major problem they have before they get this thing running, I think it's exceptional. Their backlog right now is huge. It's 7 years of production. Now, they recently announced a 10% dividend boost and the resumption of share repurchases, which they haven't done for 4 years. Now, I think this new plan, this 787, the Streamliner, it's a real game changer. They use a lot of carbon fiber in this. It's lighter. It's more fuel efficient. It can fly further. And I think it's really a play on the world economy. So, and it's when you build a plane like this, it's hard for someone to these are very difficult, as we're finding. They're 3 or 4 years behind in production. But I think as they roll more of these off, the cash flow from this company will be enormous. And from a technical standpoint, the stocks, it just actually made a 5-year high this week, but it's coming out of a multi-year base. So I think you could have many years of growth ahead on this company.
Yeah, nice breakout over, $78 a share, probably a little bit extended up here, but one to keep an eye on. Again, see some tight trading in a weekly chart, maybe a short consolidation, low volume pullback to support, give you an opportunity to start building a position here. Keir, always appreciate the time. If you want more information from Keir and his long-short fund, go to BrigosCapital.com. Keir, always appreciate you coming on. That was a quick segment, but thanks very much.
Thanks, Ken.
All right, take care. All right, lots of good information from Keir McDonough. Always appreciate him coming on. Wrapping up the show when we come back. Breakout Investing on TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Checking in on the markets one last time before we go to Rick in Orlando, Florida, who wants to talk about a home builder. Right now, the Dow still up near its session high, looking for 10 straight up days, up 74.5 points to 14,529. NASDAQ Composite up 13 points, 3258. S&P 500 up a little more than 8 points to 1562. Mentioned volume earlier in the program. Good but not great, tracking about 5% higher than what we saw on Wednesday, which was very, very light volume. All right, let's head out to Orlando, Florida, talk to Rick, who wants to talk Pulte Group, I believe. How you doing, Rick?
I'm doing fine. Thank you for taking my call, Ken.
You betcha.
Yeah, the reason I liked Pulte is, anyway, it looked like I had a good chance at making some more move tomorrow. That's why I was interested in it.
Yeah, no, it's solid. Home builders are acting very, very well today. The one thing I don't love about Pulte, I mean, it's in a good technical setup here. The volume is good, but it's not great today. So it looks like it's ready to, possibly take out a swing point right around 2060, 2065 in that area. But, volume is tracking only about 10% above average today. That said, Ryland Group, RYL, similar technical setup. You've got volume almost double average in that stock. So home builders could be ready to get going here. Volume not that great in Pulte Group today. Good setup though. Volume much better in Ryland Group. So I think Ryland is just as much worthy of consideration here.
After I looked at that, what you're talking about, the volume on the 12th of February, I see exactly what you mean. He's breaking through there on almost double volume.
Yeah. So cool. Good action in the home building group in general, but Pulte Group's got a good setup here. Just not enough volume today for me to get too excited. Ryland Group, you're talking double average volume today.
Exactly. Thanks so much, Ken, for your help.
All right, Rick. Have a great day. Thanks for the call.
You too. Bye.
All right, always enjoy hearing from Rick. Always seems to be on the right stocks, but definitely liking the move in the home building group today. Let's see what else do we have here. I wanted to check in on Silver Spring Networks. This is an IPO from yesterday that had a huge debut, and it is holding gains just fine here, unchanged. At $22 a share. Silver Spring Networks priced 4.75 million shares yesterday at 17. That was at the midpoint. Demand pretty strong. It's a company that supplies smart grid products and services to the utility industry, and holding gains nicely here. Recently trading around 22. Take a look at another base building stock here as we head into the close here. SolarWinds having a good day today. Decent volume. Stocks up a little more than 2% to 60.89. And I do have a weekly chart here for SolarWinds. We'll check on that here. SolarWinds is in close to breaking out of a big, long base here. Here it is, not SourceFire. SolarWinds, SWI. Yeah, you can see the base that started last year in the summertime, maybe into the fall, but just a big, long sideways consolidation. Could try to break out here. This looks to me like possibly a fourth stage base, so it has made a pretty big price move already, but looking for stocks that could be poised to break out, you'd have to include SolarWinds in that group. A recent breakout over 58, its all-time high of 60.95 looks to be in play, recently trading at 60.88. Coming up next, the Tom O'Brien Show. See you back here to wrap up the week, 3 o'clock Eastern Friday, another edition of Breakout Investing. Have a great day, folks.